Happy Tuesday, folks. Anthony Special here with Special Analysis, unedited on the edge of the market. Hope you're having a wonderful day. As promised in yesterday's video, today we are going to cover a handful of positions that we have been watching. So we're going to go through some open positions, our most recent one that we had shared with you just yesterday. And we're going to look at a few other ones that we've been monitoring. So the market's been obviously a little hectic. What we experienced yesterday, Monday, was what we would call a relief rally. Could that continue on higher? Absolutely. Could it be halted where it is? It could very well be. So what happens like when the market's on the way up? There's profit taking. Well, the same thing when the market's on the way down. Well, Wall Street doesn't just step out of the way. It's called shorting. So we short the market. And then there's what's called short covering, meaning when we exit those positions, we have to buy them back in order to get out. So what that constitutes for us is relief rallies. Just like we have corrections, off of our impulses on the way up, we have corrections off of our impulses on the way down. And that's something we experienced today, seeing the Dow up some 600 points roughly or so. But I'm going to show you something very interesting. And you can think about it for yourself. So let's jump right in. We're going to open up the chart. So first and foremost, we're going to start with the idea that I did share with you yesterday, and that was a shorting position on the Dow Jones Industrial Average. And that's exactly what you have here in front of you. This is a weekly chart, meaning each bar constitutes one full week worth of trading action, 5 trading days, Monday, Tuesday, Wednesday, Thursday, Friday. Obviously, the bar that is open right now is only the activity that has occurred this week thus far. So, last week, we were offered a short at the close of last week. What does that mean? Let's break it down real quick. So, price action, this black channel structure here, price action had settled below it by more than 1%. So that's the rule, more than 1%. So all I do is I measure from the structure to the close of the candle. I have 1.87%. That meets my criteria. Now, why do I use this 1% blueprint? Because statistically speaking, by studies that have been done by economists, this does grant you an 80 to 90% accuracy rating. Now listen, we're going to be right every time? Of course not. The world doesn't work that way. But listen, I'll take 80 to 90% in anything I roll the dice on in life. That's pretty good. I'll take it on my health. I'll take it on my money. I'll take it in my businesses. I'll take it in my investing. So that's why I personally use the 1% blueprint. Do as you please. I'm just sharing with you the way I approach it so that this is a learning experience for you. That's what this is meant to be, a learning experience. So with that said, we have our 1%. We have our setup here. We have broken support, which is now to be considered resistance. We have a target. We have a stop. Now, today we experienced, like I said, what we call a relief rally. Well, 626 points of relief. So that means there was short covering. Now, it doesn't change the trend necessarily. You could still see prices going from the top left to the bottom right. I mean, we're still in a downtrend. Here's lower highs and here's lower lows. The trend has not changed because we had an up day. Now listen, your biggest up days are going to be during a down market. That's typically just the way it is. Right here, 1,820 points on March 22nd. See, the market was in a downtrend. So you get those biggest short covering days during it. So what happened today? So we shorted this based on the break of support, which now what does support become after it's broken? Becomes resistance. Look at what happened. Let me zoom in to our relief rally. So the market got bought, but where did it stop today? Now you can look back at yesterday's video. You can look at TradingView. I did not change any of these channel structures. They're all what was already there. So don't think, oh, Anthony's just making it look pretty so he can, tell us he knows what he's talking about. That's not the case. It'll never be the case. That's not who I am. Listen, am I wrong sometimes? Yes, I am. It is part of being a human. It is part of being a trader. But the reality is we came today literally to and closed at the area that was once support and is now resistance. We actually penetrated it during the day. You could see that little wick of that candle there. So at some point prior to on Monday, price had actually traded through that area. But we know that that's a key area where the buyers and sellers exchanged control, and you could see that price had then pushed right back down. Now, I'm not saying that, tomorrow that price couldn't trade a little bit higher, but we have another resistance structure to contend with. If it does. If it doesn't, and this structure holds for us, then we just wait for it to roll over. Could it take a couple days? Absolutely. Absolutely. But the point of the matter is, with the right analysis, we can identify where the areas are that the bull and the bears fight. We want to be on the side of who's winning. Now, we can obviously see the overall trend is downward. How do we identify that? A couple ways. Obviously, the visual picture. 2, as the trade transpires, the risk becomes less, the reward becomes greater. What do I mean by that? So this orange channel is serving as resistance. As time goes on, it continues to go down, meaning it continues to descend. As it descends, in theory, our risk gets lower, 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 lower. What else happens? Our reward, our support, continues to descend as well. So we're trading short. That means that our reward gets bigger, 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 and bigger with each week that passes. That is being on the side of the market. Plain and simple, that's what it is. So what do we have today? Short cover rally basically is what we experienced. Could it go higher? Yes. What happened though? Price literally traded to a key area which we had previously identified is an area where the power between sellers and buyers had exchanged hands. Currently, who's still in control? The sellers remain in control at the moment. If we get a 1+% settlement above this black channel, then the buyers have regained control. Could that happen? 1,000%. Anything can happen in the stock market. If you're not prepared for that, this is not the game for you. So, without getting too deep into that, we're going to run into a few other stocks we're watching. Boeing, we shorted this a few weeks back. Again, today we had a little bit of what's called a relief rally or short covering rally. Didn't get too much out of Boeing here. We're still kind of hovering around. We've made some really great progress. We've advanced our stop at this point to 162. We're short at 148. We're looking for 112. Came as low as 117.08. So we just need another push down, and this should probably get filled, and we'll be out of Boeing. But it's working nicely. We've been in this now for just several weeks. Boeing triggered on a miss on earnings, so that was kind of what accelerated this. Netflix, we've been watching this for a while, and price is just kind of dancing around here. I was drawing this tiny little structure here just to make a point earlier, but you can see we're just kind of hovering around, floating around the area of which we shorted it. This is where we got our confirmation. Again, we just need another heavy push for the NASDAQ, and it will take this with it. Google. Similar scenario. Here's the break. This gave us our 1+%. Usually place an arrow there. Make it blue. This way we know which line it broke. Okay, so here's our 1%. Again, let's measure it out just for practice. Boom. There, we had about 4.73%. So plenty of confirmation. Price came back, retested, confirmed. The sellers remain in control. We never closed back above, even though we traded back to it. Sellers have remained in control. Just need another push to the downside. Again, if the NASDAQ goes, it'll take Google and Netflix with it. Or Netflix or Google will take the NASDAQ with it, is what I should really say. Ford Motor Car Company. Similar setup here. Here's our 1%. Here's our entry. Here's our stop. We've fuddled around a little bit here. Again, we just need another push to the downside, and this should likely fill our target here. We have a $1.25 risk. We're risking very, very little bit, very, very little money here. So from 14 to 15 and a quarter. I mean, we're risking about $1 $1.25, about 9%. So it's working. It's doing its thing. But again, we experienced a relief rally or short covering rally today. So we have not seen the market push to the downside, but we can also tell that this market as a whole continues to push its way down. Citigroup, we've been watching this for a little while here. You could see it popped, did not hit the stop. We have a tight stop here because of price action. We are risking about 3.5%. So it's held thus far. We could probably consider exiting this trade. Let's see, we get 1% here. Yeah, it got 4%. The thought process will be to close this trade at tomorrow morning's open. Get out. I mean, you'd literally be losing, let's call it about 1.25%, roughly 1.5%, somewhere in that neighborhood. So this is confirmed, meaning that it has gone past that 1+%. So it is time to exit Citigroup for about a 1 and change percent loss. Listen, guys, if you have to take losses, and you will have to take losses as a trader, this is the way to do it. We've traded on the right side of the market. We traded with the trend. Doesn't always work out. But we'll get out with like a 1.25%, 1.5% stop loss. I can live with that. I can sleep well at night, risking less than 2% on a shit trade, and knowing that other good trades I'm making 10, 15, 18, 20% on. I'm happy with that. I can live with that. Gold futures. We spoke about this over the past couple weeks. Listen, this trade overall, the trend still remains up long. So, understand that this was a counter trend trade. A, which is not favorable. B, there was much, much more risk than there was reward. So for me, that's a no-go. But I'm just doing this to analyze it for your benefit so that you can see it. Here's our much, much more than 1%. Channel structure, right to the close, 2.85, 2.82% roughly. So that's our entry. Here is the push, basically. Pushed back up, tested, pushed even closer to our resistance channel. And now price seems to be pushing its way back down a little bit. Could this roll over for us? It could. But again, a couple things kept me out of this. A, the risk was huge compared to the reward. That's a no-go. And B, we were trading something short in an overall market that we're still building long structures for. So what happens in that situation? The risk continues to get bigger. The reward continues to get smaller. So in those scenarios, we don't, this is not the most ideal for us. We want it to be the other way around. Last but not least, Ethereum. We've been watching this, and it's working thus far. So what do we have here? We have confirmation. Here's our candle. Here is our, let's say, 14% worth of confirmation. So this is our trigger to sell. This is where the buyers remained in control because they were reactive to support, and this is where the sellers took over control because they broke support, and now this serves as resistance. So again, wherever the fight occurred, we need to put our stop beyond that, and that's exactly what we did. So our stop is above this. Because that's where the indecision became decided. So that's where we have it currently. Prices, again, it's working. It's doing its thing. If the overall market gets a downside push, cryptos seem to be trading with the broader markets at this time. So that could help this position along. We successfully navigated Bitcoin in the same direction. It broke a channel, completed a structure to the downside. So if there is more pressure for the cryptos, we are expecting it. So I think that covers everything. The only one that we have long is Chevron, CVX. I don't want to forget this one. So I've been watching this one for a while. I've already advanced the stop. I have a target currently at about 195, expecting 200 and change. If the underlying asset, the oil market, the WTI market does break, it's not a matter if it does, it's a matter of when it does. when it breaks and it pushes, this could take Chevron with it very quickly, very aggressively. So the thought process became, here was the break, here's the entry. You could see we've kind of just muddled around a little bit, but this candle right here was a great retest. You can see price traded below, but on a weekly basis closed above. So that's why I love a weekly chart. A weekly chart really tells me who's in control of the market in the big picture. A daily chart's great too. Don't get me wrong. You can be very, very successful trading on a daily chart, but I really love the weekly. So I just built a brand new product with Traders Agency, and it's called Project 6x6. The name of the product is called Part-Time Profits. The promotion's Project 6x6. But the point of the matter is the entire program is built around how we confirm on this weekly chart, because that's where I truly believe that is where the ultimate confirmation comes from. My students and members of that service, that's what they're going to learn. They're going to really learn. We're going to dive into how do we build these structures so that we can, take advantage of these trades on a weekly time frame on anything. Crypto, currencies, on futures, commodities, Forex, whatever, you name it, it doesn't matter. Equities, we'll be able to do it. So it's exciting to see it because that's how this is going to do it. That's my personal favorite way to see something set up is on a weekly basis, which is what we have here. So we're watching this closely. Again, as long as the WTI sector, the energy sector pulls up, this should go with it, and this could be a really, really nice trade. So we will keep you abreast of this as well. So that wraps up the open positions that we have. Again, we had what we call a relief rally on Monday. We're going to see how that transpires into Tuesday, into today, and then we'll see how it transpires into the end of the week. So listen, again, the end of week normally tells all. So that's what I really, taking the time over the weekend to really sit down and soak it all in is what really gives me, at least I believe, a little bit of an edge when it comes to the market the next week. So guys, I appreciate you as always for being here. If you found some value in this, if you were entertained just the slightest bit, if you learned even something, if you were just tickled by it in the littlest bit, below this video, if you could like it, share it, subscribe to the YouTube channel, I'd greatly appreciate it. This is something I do completely 110% for free for you and for as many people as we could possibly share this with. So I hope you had a great day. I hope your week's going well so far, and I hope you enjoyed this video, and I look forward to seeing you again tomorrow, where I'm going to share some exciting results of another trade idea that we had taken that we did not discuss today that had closed out with great profitability. So I'm really, really excited to do what I call a case study for you tomorrow on a particular stock that we've been watching now for a couple weeks. So I will see you tomorrow again, and I hope you enjoy your day.